Today's market call is presented by Fidelity Investments and their all-new advanced trading platform, Fidelity Trader Plus. With Fidelity Trader Plus, you can customize your preferred tools and charts and tap into crucial data across all your devices. So I can save an order on my desktop at home, get a mobile alert here at the studio, and complete the trade in the Fidelity app without starting over. Try it for yourself at fidelity.com/traderplus. Monday, the 1st of December, 11 a.m. on the East Coast. Watch me get Dan agitated. It's been a minute since we've done our last market call. I don't use that term, but I know it infuriates.
But you just used that term.
Yeah, I know, because I know it sort of twerks you a little bit.
It twerks me. You know who said it last night watching Sunday Night Football?
I have no idea.
Mike Tirico.
Who sucks. Did I say that out loud? Sorry.
All right, but hold on. He said twice, as the Commanders were moving down the field, they're going to take, no spoilers here. Well, spoiler alert, it already happened, to tie the game versus the Denver Broncos, to take it into overtime. And when it looked like they were going to take it into overtime, Tirico said, it's been a minute since the Broncos have won a game in overtime. And I was shocked. It was 10 years ago, 2015. Okay. But then he said again, it's been a minute. And that to me was just
disqualifying.
Look at you. You and I just can finish our set. Hey, guy, what time is it on the
8 a.m. on the West Coast? It's December 1st. By the way, for you futures players at home, that's the letter Z, Z, Z.
Zed's
whose bike is that? It's not a bike. It's a chopper. Whose chopper said? Zed.
It was you know who it was in Pulp Fiction. It was Bruce Willis in the character. Yeah. Okay. Guy Adami. So it's been a few minutes. Okay. We're back, baby. On the market call. Lot to talk about. I don't know about you. CC in our fine newsletter, which comes out every Sunday night and then Monday.
Check it out.
Friday. The only day it doesn't come out is on Saturday. He made a point, which I thought was really interesting. I wasn't paying attention to, that the S&P was dead flat on the month. Now, it seemed like a lot of stuff went on in the month of November, right? We did have this major correction in momentum names, the Mag 7, that sort of thing. But the S&P being unchanged speaks to something else, right? It speaks to some other sectors were doing the heavy lifting. We're seeing a rotation. You've been talking about healthcare for a while. You thought healthcare would catch a bid. I'm not sure part of your thesis was rotation out of tech. I'm just throwing that out there. You thought there were some fundamental reasons, but you did see other groups that actually, they breathe a little life into them.
Yeah, and the fact that the S&P was flat on the month of November, I do think actually is worth talking about, because at earlier in the month of November, I sort of posited that there was a very good chance we have an outside month. In other words, the high for the month of November would be higher than the October high, which happened. And then the low of November would be lower than the low in October, which also happened. The only thing that didn't make an outside month was the fact that we're able to sort of defend those lower levels, and we bounced and we closed unchanged. So you had an outside month in terms of the extremes, but you didn't have it in terms of what we needed to do technically. So what potentially could happen now is you have sort of this sort of inside action, and then the market determines where it's going to go from there. But I do think the fact that we defended, again, that's the 200-day moving average. If you were to put up a 100-day, you will see that we defended that and bounced. I think that was encouraging. In terms of the rotation, part of the thesis was there was going to be rotation out of the sort of the high-flying tech names into healthcare, and that happened to a certain extent. The question is, will it continue to happen into the new year? And I think there's a pretty decent chance that it does. Obviously, a lot of it hinges on Nvidia, but we've already seen some of the other names starting to roll a little bit.
Yeah, and if Amanda can put a 150-day, we have Carter Braxton Worth, who's going to be joining us.
Sorry about that. Yeah,
and so we're gonna hit some of the earnings names this week with Carter. We're also going to talk about some funky action guy in silver. This is a sneaky one that you've talked about a bit over the last few months and playing catch up to gold. Gold was getting right back up there towards those prior highs. So we'll hit all of that. Look at that. I mean, you see that 150 guy, that's basically just above the breakout level from February. The 100, obviously, as you just said, was a kind of a support level there. So it'll be interesting. It won't be too long before that 150 is up there at 6,500 or so, which makes that a kind of a battleground level.
I agree with that. And, the 6,500 level ish was also the lows from October. So there's a lot of reasons the market wanted to defend it, and it did it pretty resoundingly. I mean, we rallied over 300 S&P handles from the lows that we saw earlier in the month of November, which is pretty astonishing. I think it's astonishing, at least, because it had every reason. There were a lot of factors at work to suggest that we could do sort of the rollover. But for whatever reason, the market defended it. We'll see. But, as you mentioned, there's some other things going on today, and I don't want to sort of jump the gun, but it's worth mentioning that Bitcoin just can't get out of its own way. And the way I feel about that. To me, that's sort of risk on, risk off in terms of the NASDAQ specifically, but the broader market in general. And the fact that Bitcoin bounced off the sort of 80 to 80,000 level, but we're right back down testing it again, I think is worth pointing out.
Yeah, and so something interesting, and we were talking about this a little bit last week, has kind of materialized, and it's not actually confirmed one way or another. But let's pull up MicroStrategy or strategy as it's called, and we know that over the last few years, I mean, Michael Saylor, CEO of this company, has been buying everything, well, selling everything related to the company, equity, debt that was not bolted down, and using the proceeds, all different types of instruments to buy Bitcoin. And you see what's going on here. The whole notion is that the value of Bitcoin should go higher, right? The idea also was that the stock and all these other perpetual preferreds and, converts and everything else would kind of stay in the game, right? But you see what's going on here now. So as the price goes lower of MicroStrategy, their ability to fund purchases of Bitcoin or more, they have 650,000 Bitcoins, goes lower. And then what happens to all these securities that they've issued on MicroStrategy on the company? Well, they don't really have a ton of cash flow or anything. So you see what's going on here. So MicroStrategy probably is selling Bitcoin. Now, that's just a guess. It was a bunch of stuff that I was reading. So the thing that they had been buying that they were hoping would go higher relative to the company, the business that they have, right? The whole thing is coming unwound in a way because investors are losing, I guess, confidence in the strategy. And therefore, the underlying that they were buying seems to be under pressure for them to continue to support some of these securities that they've issued. Does that make sense? Is that confusing?
Well, it makes sense. Yes, I would push back. I don't know that they're selling Bitcoin. If it were to come out that MicroStrategies is selling Bitcoin, that would be, I think, problematic for a number of different reasons. I don't have any inkling that they are, but
but they have to
maybe it's
pay
out there.
They dividend on these perpetual preferred.
No, I get it.
But that's what I'm not smart enough to figure all that out. And so I've heard some folks opining in order to do that and avoid defaults. And Michael Saylor's been out on basically on every network that you could think of in digital and social and this and that, whatever, saying that they have enough, cash to fund these things and pay the dividends and this or whatever. The market is calling bullshit on that.
That's been something that we've talked about. I know for a fact that we've said now for a long time that there are going to be some weird things will start to happen if the price of Bitcoin starts to trend down to the average price of their holdings, which I think is now either side of 75,000. And obviously we're not that close, but we're closer. And I think what's happening, and I think you're starting to allude to this, the market is going to try. The market's going to test them, and it's going to test them in the form of exactly what we're seeing now. And then they're going to see, how it all shakes out. What you're seeing in strategy, though, to the downside is sort of what we saw to the upside. I guess it was in December when the stock completely outperformed not only the broader market, but the underlying asset as well. Now you're at a position now where it's underperforming the underlying asset and it's underperforming the broader market. So something's clearly amiss here. And now, again, mathematically, I'm not smart enough to figure out, but clearly something's going on.
Yeah. And I guess I'll dox him because this is the sort of comment that I can't imagine that he'd be disappointed for me to say. So our good friend Vincent Daniel, he and I were texting this morning and, we're just, I made a couple comments about this. He didn't comment on this situation other than He said, this is what happens when you run geared. Okay. So like all that leverage. So again, there seems to be some sort of unwind guy. Maybe it has nothing to do with the company. Maybe it has to do with some of the folks who have this sort of trade on.
Something clearly going. And, think about what's happening here. And I don't want to get too bogged down, but, Jim Chanos basically put the same trade on that MicroStrategy or Strategy did, long Bitcoin, short the underlying effectively. And that worked really well. Now, maybe Jim will say he took it off too soon. I mean, but, you're never going to sort of ring the bell on the bottom. You're never going to ring the bell on the top. But it was a very successful trade. But if you think about it, I mean, in some ways, this is sort of what should be happening, because if you're using your stock as collateral or whatever it is, you're basically saying that Bitcoin is worth more, I guess, if I'm really dumbing it down, than the actual stock is.
Yeah. All right. You just said, I don't want to get bogged down in it. Let's move on. So here's another thing. And Mark Rowan, who's the CEO of Apollo. Okay. So this is one of these alternative investment companies. Obviously, private credit is something that they are knee deep in. And, he was, I think, on CNBC last week talking about the hysteria around, whether it's investors or the media or whatever, talking about private credit. And one of the issues there is obviously that you don't have the sort of transparency you do in the public markets, right? And so, but this is interesting to me, Guy. So this is a log chart. This is a 5-year. This is coming off the lows, right, in 2022, and you can see that. I don't know, maybe it was like $45 or something like that. A guy is as high as, let's call it 180. What are the highs and lows there? And so you think about what's going on here. It's inability. We have JP Morgan was making new all-time highs. Goldman Sachs was making new all-time highs last week. Morgan Stanley. I mean, look at how far this is from its all-time highs, which came late 2024. And I think part of it was the expectation that some of the deregulation that was expected in this new administration, or a whole host of other things, were going to be beneficial to this sector, right? Look at this thing, man. I mean, this is kind of interesting. You have a downward sloping 200-day moving average. You have this pennant formation that's forming. You have that long-term uptrend, that sort of thing. And then another one really quickly is Blackstone. And this one looks really different because you see it kind of maybe bounced a little bit off that uptrend, coming from some of the same sort of time. What is this saying to you? Because here's, you see the CEO of, let's say, Apollo defending, this sector, and defending the strategy and defending the credits and, all this sort of stuff. But these things don't act well.
No, and I think the high in Apollo is like 190 or something, but your point is well taken. I mean, Blackstone's a little bit of a different business, but they're also, you throw Carlyle Group in there. I mean, they're all going to look similar in terms of the recent declines, but I think what it speaks to is, again, the market is starting to sniff some stuff out on the private side of things. And, we had a whole conversation about marks and when companies have to mark, and, what happens if they're forced to mark. And a lot of it's sort of true in this world as well. And I think the market is trying to sniff some stuff out. Now, with that said, you're not seeing it in high yield at all yet, but you never really do. I mean, those things, it sort of doesn't happen, then it happens all at once. But this is absolutely, to me at least, a bit of a warning sign for some other things that are sort of lurking out there in the marketplace that until today, or at least last couple of days, the market is sort of looked past.
Yeah. Well, maybe we could get the opinion on the technical front from somebody who, we're very fortunate to have join us. Yeah, his name is Carter Braxton.
Oh.
Whoa, he was waiting.
Guys, how are you?
Very
good. Can you hear me? I've got
we hear you.
Had a little bit of a microphone issue, but if you can hear me, I can hear you.
Yeah, you sound great. Hopefully you and yours.
Now I can't hear you.
Oh, really? Okay. So he can't hear, but he looks great. Carter Braxton. If you hear us now, there's a little bit of an echo.
Yes.
Yeah.
There's an echo. I think we're wired in. This is not working, and I've got something jerry-rigged here.
Well, maybe
the echo is unbearable.
Or Bill can give us a sense of what should he do, Bill? What should he do? Should she unplug? Just use the microphone on his computer. Unplug that thing, that USB-C cable. Maybe
live TV, man.
I tried that. I put the mic in and out.
All right, really quickly, let's run through some stuff.
Hold on.
There's Kim is going to help out here.
Get Kim on the camera. I mean, she rarely makes an appearance.
Well, she's never made an appearance, and she does exist. Maybe
Rarely
she-
is
you know,
well, I guess
she's
rarely is more less than or more than never.
yeah. She is, I wouldn't say the brains behind the worthcharting.com, you know what I mean? But she's been there for years with
Linchpin.
him, and she's awesome. She works with our team amazingly. And maybe she's an AI. Who knows? She's that good
She
at
doesn't
what she does,
exist.
Guy Adami. Hey, Carter, you back with us?
No.
Can you hear me?
So I think
Yeah.
you should be able to hear now through my microphone.
Oh,
and
there she is. There's Kim.ai. Right there. Thanks, Kim. All right, Carter, really quickly. I don't know if you saw, we just had Apollo and Blackstone up. They look like different sort. I mean, they kind of look the same with the pennants, but if you look at where Blackstone is relative to the downtrend and the uptrend to, let's say, the narrowing of that flag or whatever you want to call it, on the Apollo.
Sure.
Any quick thoughts on these?
Well, the first thing is not so much the current circumstance, which is important, is that the precondition. These were the biggest winners, right? Within any part of the FIG, right? Any bank, any broker, any insurance company, what have you. This is the beta trade. This is the cyclicality. This is boom bust. This is bull market, bear market. This is credit. This is leverage. This is hopes and dreams. It's everything. And obviously there are 4 or 5 big names: Goldberg, Kravis, and so Blue Owl, I guess, and Ares, ARES, and it goes on and on. But what is important is, again, how big their sell-offs were, right, on the tariff swoon, and then how not a one has really been able to make a new high, and that's an issue. I would put them both, obviously, in the pair of twos category, which is to say, here and now, if this were a hand of cards presented to you at the poker table, would you press your bet, add money to this, long or short? Or would you say, you know what, I've already got the ante lost, I think I want to just fold? And folding is an important part of poker, and I would characterize these as pairs of twos. It's a low odds hand of doing anything, long or short.
Yeah, I mean, go back to the Apollo for a second. To me, I just find
That's
this
a
one really
stronger
interesting.
chart, sure.
Yeah, and I feel like I want to fade this one, Guy Adami, but I don't really see any near-term catalysts, and I do see some potential negative surprises. Carter, I know you waited, and we just had these technical difficulties. Maybe we can kind of get through some of these earnings names. Just when you thought earnings were over, we do have a few stragglers, and they're not insignificant names, right? And so, Guy can give us the 411, how he's thinking about the fundamentals here. But do you want to rip through Marvell's interesting just because, again, it's a custom silicon name, a competitor to Broadcom. We know that Google just caught this bid because their tensor processing units that Meta might start buying from them. So a lot going on in this space and a lot going on away from Nvidia. And I think that's the main point here.
Yeah, I mean, and you can see here, these are just almost arbitrary lines, right? I mean, if presented with that chart, there's not a lot to say. It's elemental. It's obvious that it's lower than its high of January 2025, and it's higher than its low of March. And that plunge, that sort of tariff plunge, is incredible. But here and now, there's not a lot to make a case, bullish or bearish, for having a large commitment or even much of a commitment at all.
I look at Marvell, Dan, real quick. You say, I don't know, maybe it's trading a little south. Maybe let's just round it up. 30 times next year's numbers, although it's not. It's probably closer to 28.5. You obviously had that huge drawdown back in this year. January went from, I think, 125. I think it was more than cut in half. And now here we are. What we've basically done back of the envelope is make a 50% retracement of that entire move we saw earlier in the year. So this level is important. If you go way back in time, by the way, it's also the level in December of 2021-ish that we topped out at before cascading lower the next couple of years. So this is a pretty critical level. I only mention that because I think you got to wait, and Carter's pennant speaks to this. I think you got to wait and see what happens. If it breaks the downtrend line, then maybe play it from the long side. And conversely, if we continue to sort of meander and trade in more narrow ranges, I think you just sort of let it be.
Yeah, I just want to focus a little bit. Maybe Amanda can pull up a 5-year on the FactSet machine here, because you talk about that December 24 guy. Remember when we had Broadcom had that huge breakout? They gave that huge guidance, that TAM on AI chips. And, maybe we can isolate a little bit just late 24 and, to now. I mean, we had that huge gap, that breakout, that level you were talking about where we had failed, going back to 21. And then look how quickly it gave all of that back. That gap near the all-time highs, that was DeepSeek, filled in that gap, kept on going lower. Guidance on that next quarter, not great. Huge gap lower and kept on going lower. So now we've kind of worked back at these levels. If there is the slightest bit of disappointment, this thing's on its way back, in my opinion, towards those September lows, which gets you maybe back towards 60. So again, that's the combination of like the way we're thinking about the fundamentals and maybe some of Carter's technicals there. So again, this is going to be a really interesting name, in my opinion, especially because of the underperformance of Nvidia over the last few weeks since its earnings because of competition. Carter, do you want to work towards?
What about the volatility before you go? I mean, if one, again, it's always right to know nothing. If that's the pure. So if it didn't say Marvell, it said Schmarvell or Carvel, maybe. And we thought, oh gosh, this might be the ice cream thing here. But if it had no names and tickers, and you present it to a thoughtful investor, a large portfolio manager, and you said, okay, I want you to consider this investment. And the person with they would say, wait, what in the hell? This thing went from 40 to 100 and then dropped from 100 to 40, then went from 40 to 130 and then dropped from 130 just in 3 months to 50. What are you proposing I'm involved in? What is this? Is this you would think it was a small little stock trading with one decimal over, $9 up to 13, down to $5. And incredibly, it's Marvell. It really speaks to the what they call the cult of equity, and is any stock worth anything? And it can be worth anything the imagination will allow. Because this one was worth 130, then it was worth 50, and now it's bounced from 50 to 91. Incredible.
Yeah. Guy is a bit of a Fudgy the Whale sort of guy.
Well, it's funny. I worked at Marvell, as you may know, and I used to be in charge of making the cakes. You would use soft ice cream. You would put the soft ice cream from the machine into a cake mold, and then you put it in something called a shock box.
Whoa.
Which, yeah, it was, however many degrees below zero. So the cakes would be literally frozen solid, which would allow you to work on them with the things to decorate the cake, and then you'd put it back in said
awesome.
shock box back.
I like their flying saucers. I think they're great. Okay. So moving on to a sector that Guy has been, you've been a pretty constant bull in the security space. And, there's been some dispersion in some of the names, some that are exposed towards, some different verticals, some different areas of technology, or just different sectors in general. CrowdStrike, this is one where we can go back and we saw that summer of 24. Remember that huge hack that they had, but you see this series of higher lows, higher highs, that sort of thing. It's approaching that uptrend that's been in place from those 24 lows ish. Carter, what do you see here? This isn't a big implied move also, and we've seen some stuff on the hack front. It seems like they never end. So thoughts here?
Yeah, again, the line's somewhat arbitrary. My hunch is to be on the long side here. The stock is generally an uptrend. You have a pullback that looks to be market related. Everything pulled back. The one negative or defect, of course, is that a lot of things have bounced over the past 3-4 sessions post sell off, and this has not. Small long would be my thought.
Yeah, there are a lot of problems with this. A couple things, and Carter's probably going to wind up being right, but as you just said, you go back to the summer of 2024. I mean, that peak to trough decline was historic, in a word. That was self-induced, but you know what, Dan? You saw a similar move in February of this year when it went to 450. I think we traded as low as 320. You saw it again to a certain extent this summer when it traded from 514. I think it got all the way down to 415. And now here we are. We were just flirting with all-time highs, seemingly, I don't know, around Halloween or something like that. We've sold off a little bit. My concern is, you've seen pretty dramatic downside moves a couple times that have all been bought, but maybe we're on the precipice of that. That coupled with the fact that it trades north of 100 times next year's numbers, which means they have to say and do everything right.
Yeah, no doubt. 6% implied move in either direction on average over the last 4 quarters. They've moved about 5% the day after earnings. 3 of those were down sort of moves. You talk about that that PE ratio. You talk about a 26 times sales this year, 21.5 times next. Revenue growth about 20% over the next few years. It's expensive. I mean, these sorts of things are priced to perfection. All right, Carter, last one here. And I know that where you've been on this one, probably for a year or so. You see the line. Salesforce reports after the close, I think on Wednesday. Thoughts here. This is like textbook Head and Shoulders. This thing is disgusting looking.
I mean, this is heavy, right? I mean, so it is all the things one doesn't seek out when looking to buy a stock or a currency or commodity or a crypto or anything in terms of charting. The risk to being, a huge short, playing for the break, which is that you often, when they're so distressed and it looks so obvious, if you will, even though there's nothing obvious about the market, and when it seems obvious, it's usually wrong. Even though the thought would be it plays, it breaks, go for it. I would go small, right? Often these set up so poorly, and then there's this out of nowhere. Wow, it wasn't as bad as people feared. It pops to 240, this kind of thing. So short, for sure, as technique goes, that's elemental. It's just a question of sizing. I would do it small.
I look at it real quick, Dan, and this 230-ish level in Salesforce, we've bounced a couple times, but now the more, and Carter will tell you this, the more times you trade down to past support, the more inclined you are to sort of break through it, and that appears as though what's happening here. I go back to June of 2024 when we traded and held 230, and it's been a couple times since, but the fact that we're here again, and maybe they'll surprise, but the fact that we're here again, to me at least, is somewhat troubling.
Yeah, no doubt. And I like the way that Carter phrases it, small, and this just, you're playing for basically that 24 low there. If you're doing it, it would have to be an all out disaster to get it breaking through there. Carter Braxton Worth of Worth Charting. We made up for some technical difficulties in the beginning here, man. So thanks to Kim. Thanks to you, Bob. We really appreciate you being here.
Okay. All right.
Carter is the man, and obviously he brings his charts with us. He does rigorous work, and that's the word I'm choosing to use. But with Fidelity Trader Plus, you can customize a chart or start a trade on your desktop setup at home and pull it up on your phone or laptop at work. Fidelity built their new advanced trading platform from the ground up with better connectivity and more powerful tools than ever. Traders can make smarter, faster trade decisions from anywhere. Try the all-new Fidelity Trader Plus, the next generation of advanced trading, Dan, from Fidelity.
Yeah, key word there is advanced. I would also say that, you're on the road, you're on the move, that sort of thing, being able to kind of trade from anywhere on any device. Good stuff there.
That's that show, by the way. I know you're not a fan, but The Road, Keith Urban I think it's on the CBS. I think it's on, I don't know what nights of the week, but apparently they take people on the road and they try to find the next big thing in country music.
Yeah.
You're not a fan.
Going back to Salesforce for 1 second here. Just looking at the options guide, $16 in either direction the day after earnings. And let's just pull up a FactSet chart here for a second, because, what you said is bouncing off that 230 level, guy. So if you want to do, let's do a 1 year. So you actually see 2 lower lows, right, from last year's low. All right. And then you see that really well-defined downtrend from that sort of May high. You can almost draw, a very simple sort of wedge there, right? And, now let's make it a 5-year for a second. So going back to that low, I just want to talk about that kind of late 23 low, guy. So if you want to do a 3-year chart, I mean, that is a textbook Head and Shoulders. So if you look at a 16% implied move, you're basically going down to 214 or something like 215 or something like that. And at that point, there's no support, below you get 215 to 200. That's the support there.
Yeah, it's actually lower than that. As Eddie Murphy said in The Golden Child, ain't no floor here, Monty. Remember that scene?
No, I don't remember it because you're quoting easily one of the worst Eddie Murphy movies that exist that I don't think anybody has seen other than maybe Eddie Murphy.
I want the knife. Remember that whole thing?
Oh, I don't. And Bill's laughing because I don't
Because
think
Bill knows.
I don't think he's laughing with you, guy.
No, he's
He's-
laughing. Bill knows it's funny. Eddie
Deep
Murphy
down, wait,
is a
what
genius.
movie? Deep down in my heart, I know I'm funny. We didn't just freeze there, people.
I know I'm here.
Yeah.
We didn't freeze. I'm
right.
waiting.
All right. Good Morning Vietnam. Do you remember when
I haven't seen that movie since Vietnam.
it's such
Now,
a
Bill's laughing at that.
since you were yeah. So my point there is, what is his name? Something Bruno, who is basically the boss. He ran the radio studio where Robin Williams' character comes in. He's all crazy. All the troops over there are loving him. He's bringing a certain level of levity and energy to the whole situation. And the character who this something Bruno, he was also in City Slickers.
Bruno Kirby.
Bruno Kirby. And at one
first
point,
name is Bruno. It's not something Bruno.
he
it's Bruno
relieves
Kirby.
Robin Williams' character, and then he is relieved, and he goes, "Deep down in my heart, I know I'm funny," which is just such a great line because no one thought he was funny other than him deep down in his heart. Guy, today, I don't know about you, but last night I'm checking the futures. We were down like 80 basis
something
points.
handles.
Yeah. The NASDAQ was down more than 1%. I think it had a lot to do with Bitcoin down at 86. But let's talk about some of this activity we had a holiday shortened week. So we probably saw poor liquidity, but you saw what happened to gold. You saw what happened to silver. You saw Bitcoin going the opposite way. So that sort of correlation has totally broken down. You've been saying the correlation with Bitcoin is really to the NASDAQ.
No, and I continue to believe that. And I think, to me, it's sort of a warning sign. If Bitcoin is going lower, and if that's a risk on, and if gold and silver, with both are sort of some form of safety trades, are going higher, you have to say, okay, what is really happening here? And then you throw into that mix. And, Doug Cass actually wrote extensively about it. And more people are talking about it, the problems in Japan and some of the trickle-down effect that potentially have here in terms of the weakening yen and their bond market, which continues to sell off. I think that's problematic. I think that's another reason gold and silver going higher. And then throw on top of that, you want to throw a TLT chart up. And again, I understand we've really gone nowhere. But the fact that we haven't really bounced in a meaningful way and go longer term, I think it's something we should continue to watch. And we are now flirting with the 200-day moving average, which I think is important. Now, if we were to trade through it, means rates go higher, and rates obviously are not going higher because everything is so copacetic. So all things that I continue to watch today.
Yeah, Doug shared this last night. So Doug of the streetpro.com, that would be Doug Cass, who runs Seabreeze Partners, a hedge fund, and go look at his feed, watch his Twitter, follow it. He's also his diary, daily diary on the streetpro.com is awesome. But he shared a Substack guy. I'm going to put it in the show notes. I think I sent it to you last night. It's from a Gold and Geopolitics. This is the name of the Substack. And it went through great detail about the process, which the gold ETFs, the gold futures, like what they represent, where the physical is, what exchanges they trade on, how many times levered they are to these different instruments. And it was really interesting. So we'll put that in the show notes, and we appreciate Doug sharing that, because sometimes, God, do you remember that huge short squeeze? I want to say going back maybe to 2010 in silver. We also saw one during the meme stock sort of thing. And, this thing is memeable. And when you see, and this Substack was talking about the financial institutions that are, have
JP Morgan's the one that comes up all the time in terms of silver. Yeah.
We'll put that Substack in the show notes.
No, look, it's worth reading, even just out of curiosity, because it's things that we have talked about, how some of these ETFs are poorly built. And if things were to sort of play out the way I think they potentially could, the last place you actually want to be is sort of the GLD, because it's not constructed in a way that you think. Danny Moses talked about it years ago. PHYS is a place to be. And oddly enough, the mining stocks are starting to believe this as well, because they continue to trade legit at these levels. So there you go.
I mean, when you see those sorts of moves in in something that is the underlying, is the thing that it's holding it. And, this goes back to central banks. This goes back to a whole host of things. You've been talking about how physical gold has been coming out. Those that have it, they basically have rights to it are bringing it back out of, let's say, what is it? Is the U.S. Fed and then
Repatriation. Yeah. I mean, absolutely. They want, because, the old adage that you learned in, I don't know if it's constitutional law, whatever you took, but possession's 9/10 of the law, and you better freaking have it. If you don't have it, you got to be really concerned, because, again, especially in the gold market, you think it's yours, but there's some really strange things that can happen. And by the way, this started with Bundesbank repatriating their gold like 15 years or so ago. We actually didn't talk about it on the market call because we weren't doing it then, but we talked about it on Fast Money.
Yeah, we did. I mean, and we can move on from here. I guess the main point that you've been making, when you see gold, when you see silver going this way, and the way in which they're going, the speed in which it's going, it's been a one-way trade, right? And you see these consolidations, but then you see these huge breakouts, and maybe we're on the precipice of that right now. But then you see silver, what it's doing, and you see Bitcoin going the other way. There are liquidations happening. And, I saw Tom Lee of Fundstrat, who's also the chairman of that Bitminer, which is one of those treasury companies. He was on CNBC, I think, every day last week talking about what's been going on in Bitcoin. And he said it's been a technical glitch. Well, technical glitches in what's meant to be, right, a decentralized risk asset seems like a bad combination, in my opinion. Okay. And he's still saying that this thing will be 100,000 by year end.
Yeah, maybe.
Good, you know what I mean?
No,
But
but you just hit the nail on the head. The point of the whole thing was it was supposed to be glitch proof. Isn't that like the whole, whatever.
Well, yeah, I mean, it was supposed to be decentralized, so you couldn't have fat fingers. You know what I mean? We saw one of these stable coins break the buck recently because supposedly there was a fat finger about creation of some of these stable coins. And I also read something, I got to find it and we'll put it in the show notes over the weekend, talking about stable coins and talking about the risk there. They sound so stable, but if there's other things at play that cause the issuers or cause a run on the bank of these stable, and we saw it with Tether 4 years ago, we saw it break the buck. Right. So if you see folks trying to redeem the things that are meant to keep the stable coin stable, then you have risk to that. We also saw, going back to the financial crisis, when money market funds broke the buck.
You've been bringing this up for a while. You've been concerned about it, and you can draw not a straight line, but you can draw, wait for it, a circuitous line to these Tether, these stable coins, and potentially what could happen in the U.S. bond market, because I think one of the reasons for the strength of the bond market earlier this year was the fact that these stable coins and such were sort of a synthetic way to be long or to get long the bond market, and it sort of propped it up. But if it's starting to unwind, I think you also have to start to go back and look at the TLT and its vulnerability to the downside.
Yeah. Just a couple last things here. Nvidia, maybe they can pull that one up. Guy, are you surprised on a day like today, given some of the headlines that we've seen over the last couple of weeks, that you see it as up? You see that? I mean, that downtrend's pretty nasty. I know that you and I both think that we could kind of get back towards that 200, which is basically the breakout level. The news flow, though, in the near term seems pretty negative. It seems like it's been a one-way trade here. And, maybe you see this thing for a pop. I mean, I can't imagine that this is going to be towards $200. Anytime soon. So it'll be interesting.
I don't think so. I mean, this is what I'll say quickly. In the last months, since basically the beginning of November, when it made its all-time high of 212, you have a series of lower highs and lower lows. And we'll see what happens today. But, if we were to sort of give it up today, I think we're trading, 179 or something ish.
Yeah.
A bounce from 174. If we were to give it up today, that basically trend will continue. I think that's worth watching as well.
Yeah, a couple last things. All right, Oracle has not bounced. Okay, and we don't have to go through all the issues there. I think a lot of our viewers, they know exactly where we've been on this thing. Through that 200-day, filled it in the entire gap, kept on going. A lot of issues about credit and what they need to raise to kind of fulfill some of these data center obligations here. I'll just say this. and I think I've said it a couple times, if you see this thing back towards, let's call it 150, and that is not, in my opinion, like you could see that in the next few weeks or so if folks kind of lose confidence in their ability to raise cash, to build out the data centers, to realize the contracts and the revenues that they've been given, whether it's OpenAI or some others. I would not be surprised, and I'm not telling you this is one reason why you shouldn't be bearish of it or short of it or get a short exposure. I would not be surprised if we see this stock back towards 150 if the U.S. government takes a stake in it. Because if you think about the obligations they have with Stargate, domestic, production of these data centers and the like, thoughts, Guy?
We're hitting that slippery slope portion of the book where, if they were to start taking stakes for reasons that don't make a lot of sense other than to support something, I think that becomes problematic. So the fact that we traded through the 200-day, bounced back up to it, and seemingly failed, I think that is a problem. And if we round trip this thing down to 150s, which where it sort of started back in June, yeah, that is a problem. Now, I will tell you, I think we both thought that we would cascade lower from those highs that we saw on, I think it's September 10th.
Yeah,
I didn't think we were going to get down to this level, though, if I'm being perfectly honest. I thought we might fill the gap down to about 245 and bounce. It filled the gap. It bounced for about 6 hours, and now here we are.
Yeah, when the stock was 313, you and I put on a 300, 250, 200 put butterfly. That was in November. Worked very well. It got towards that 250 gap fill, which we thought it would. Again, we thought it might hold that 200-day moving average, but I would not be surprised, and I mean this, and largely because we've already heard what Sarah Fryer, the CFO of OpenAI, they kind of retracted it kind of quickly when she talked about bailout. Then Sam Altman actually kind of pulled back from that. But then you've heard more and more that if this is going to be like a sort of AI Manhattan project, that we should have government backstops. This is what's going on in China. So again, you use the term slippery slope. One last thing. I don't know if you saw this, didn't get a lot of headlines. Nvidia making another circular sort of investment. This is Synopsys. Synopsys is a design software company for technology, but specifically chips, and that's what Nvidia is focused on here. They bought $2 billion worth of stock at $414. The stock SNPS, it comes out. The stock gapped up SNPS, fat finger there. And look what's gone on here. So the stock was up a lot more. Now it's only up, Guy, 3.5%, which says something about, I guess, how important these sort of Nvidia's investments are. But look at that huge gap. This is a company that missed and guided down when they reported their last quarter. So is this the Nvidia backstop? You think about it. And this is like, why buy the cow when you get the milk for free? The company already has a deal with Nvidia. And if it's going to be non-exclusive, so meaning Nvidia's customers can also continue to use this technology, why are they doing it?
Diminishing marginal returns, I would say, because you would have, no, I didn't say you. I would have thought that, given headlines like this, anytime you have some sort of allegiance or relationship or headline with Nvidia, it typically means a lot more to the stock price, especially in light of what we've done since basically early September. I mean, you just look at that move and went from 6.25 down below 400 in a straight freaking line. You don't see that all that often. So I would have thought with this news, you would have gotten at least to the 200-day moving average, and we're nowhere close.
Yeah, and if it fills in that entire gap on its way back to 400, watch out below. That's the only thing. Make a 5-year here really quickly. So again, I know we keep talking about some of the same themes, but if you think about what's going on in crypto, if you think about what's going on in gold, if you think about what's going on in the Nvidia, this kind of, ecosystem, and it is an ecosystem right now. Those were the hardest hit things. That would be obviously Bitcoin and then the Nvidia AI ecosystem over the last month, and the S&P closed flat. So if you continue to see this sort of weakness, it's my opinion that you can't see, if you continue to see rotation into, let's call it healthcare or energy, it's just not enough. I mean, this is the theme that's underlying. And I'll go back to 2023 when we had that SVB situation in March of 23. If it weren't for, but for, see what I did there? But that's a Guy Adami term. But for this AI excitement and spend that really bailed the market out back then, in my opinion. Now you look at what's going on right now. If you think about what participation or what contribution this AI spend is to GDP growth, It's really hanging us in there. It's the thing that's putting us above trend, right? And it's also causing inflation. So you have GDP propped up, you have growth propped up by the spend. You also have it kind of contributing to inflation, but it's also overshadowing some of the underlying weakness in the economy.
That was a good, wait for it, synopsis of what's going on.
I see what you did
Good
there.
there.
It comes out SNPS.
I'm
what
sitting down
else?
with the Liz Thomas today in a little while. That will drop tomorrow. We'll be back on Market Call tomorrow. I think Elizabeth is with us on Thursday of this week, if I'm
Yeah.
not mistaken.
Yeah, no
And
doubt.
then, of course, I think Butters might be back. I don't know where the hell he's been, but
Well, he's allowed to celebrate his holiday. Where do you think he was celebrating, guy? This is John Butters. He is a senior earnings analyst over there at FactSet. Every week he writes the earnings insight blog
somewhere
on Fridays. You can have it in your email box, but we get to preview it on Wednesdays. So hopefully Butters in his data, his earnings insight
he's
blog,
back from New Hampshire or wherever the hell he goes.
Michigan, whatever.
Lakewood or Pisaki.
Did you watch that Ohio State Michigan game?
No.
Really? No college football for you this week? It was rival weekend. No, nothing. Texas A&M,
Georgia Tech. And no, it's not.
Yeah, nothing. No, nothing.
Lane. I mean, I don't want to get on this.
I want to hear it. Yeah, I want to hear it.
If I'm if I'm a benefactor, if I'm an alum, if I'm an administration, this Lane Kiffin thing it's just a really bad effing look.
Yeah, but you know what? It's
if
also
I'm the University of Mississippi, I'm looking to kick everybody's effing ass.
Yeah. I mean, listen, at the end of the day, this is where we are. And I know how you feel about college sports. I mean, this is where we are. If all the players are free agents every year, coaches are free agents, and all this money is coming in through these NIL collectives and everything like that. I mean, this is the business that they have
Nice.
chosen.
It's obviously not going to happen. And I think he probably realized it. But with that said, University of Mississippi is potentially a national championship in the conversation this year. And he abandoned the team.
Can you imagine that if you're the players, you know what I mean? I mean, and having your coach just take a big payday and go, LSU sucks. Like, why not turn Ole Miss into the next LSU? You know what I'm saying?
Well, yes, I do. And that would have been.
They would have paid him. I'm sure they would have matched anything that LSU. Yeah. Okay.
All right, listen.
Okay.
I think his daughter dates the linebacker or a linebacker at LSU. I'll put it in the show notes. No, I won't. But anyway.
So, and lastly, very last, and we're going to get out of here. What was the one thing I said to you about the New York Football Giants on the way when we were talking this morning?
They had a good weekend.
I said they had a good Sunday. Why?
Because they didn't play.
Yeah. But you think tonight, what's the line, Bill, on the it's the Patriots Giants, and it's at New England, right? It's so you have the 2-10 Giants being hosted by the 10-2 Patriots of New England.
Yeah.
Patriots have double digits.
Patriots have offensive line problems. The left side of the offensive line is out. I like Blake May.
Okay.
We'll see. The Giants, will the Giants show up for a new defensive coordinator? The other guy was an effing disaster. Jackson Dart is back tonight. So on Monday Night Football, so he's going to be jazzed.
Yeah.
This would not surprise me. I'm not saying the Giants are a good football team. They're not. It would not surprise me to see the Giants emerge victorious this evening.
Okay. So would you just take Giants getting 7.5?
No, just if I think they're going to win, play the money line. You probably get 2.5 to 1. That was my get 2 to 1.
Okay. All right.
I'm not advocating gambling here.
No, and I'm not either. But you know what? On every network, they're just talking about the games and the lines. And by the way, this Stanford Steve on the College Game Day on ESPN, he was like giving picks. He's 19-20 on the season. Why would anybody listen to Stanford Steve? The other thing, Thursday night football. Okay. Oh no, Friday. It was the game. It was the Amazon game, the Black Friday game, the Bears game. Kirk Herbstreit is there with Al Michaels calling the game. Okay. Saturday, he is doing College Game Day in Michigan. That's Ann Arbor, Michigan. Saturday night, just stay with me here. Saturday night, he was doing the Alabama Auburn game. Think about that. 30 hours. That's not impressive to you?
Good family man.
Okay, guy, you know,
What? I'm just saying. You know,
I love that College Game Day. I just think it's great with Pat McAfee. He's just crazy and he's fun. And you know what? Talk about taking something that can be, if you go over, you know, that show with your guy, the former Jets coach who you really like, the guy with the foot fetish,
Rex
what was it?
Ryan.
Rex Ryan. Like that show that he's on is unwatchable. Have you seen that show?
Well, you just said it's unwatchable.
Well, it doesn't mean that you can't watch it, that you
Oh.
have not watched it.
I have not watched it.
Okay. College Game Day, ESPN, fun stuff. Kirk Herbstreit did yeoman's work, as you like to say. So we should move on here. Okay.
Yeah.
All
Okay.
right, everyone. Thanks for being here. We'll see you tomorrow, 11 a.m.
This episode of Market Call is presented by Fidelity Investments and their all-new advanced trading platform, Fidelity Trader Plus. Try it at fidelity.com/Trader Plus. Fidelity Investments and Market Call are not affiliated. Views, opinions, products, services, and strategies discussed are not endorsed or promoted by Fidelity Investments. Fidelity Brokerage Services, LLC, member NYSE, SIPC.